Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing in crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. Wondering how on earth can anyone make money with debt? Yes, it's possible. Rich people use debt in their favor smartly, and also make significant profits from it. The answer to the question of how you can turn debt into profitable investing, that too without money, is a bit long and complicated. But in short, it's like free money that you can use to make profits. It may sound absurd, but that's how it is. Well, this video is going to clear your doubts and guide you on how you can utilize debt to make money. We will also guide you through some of the best ways that can help you make money with debt. So, without wasting time, let's dive in. Many people are afraid of the word debt, and that's because most magazines, books, television, and shows are devoted to guiding people about getting rid of debt. It doesn't mean that debt is too good or too bad. Debt can be a negative measure in some cases, but it can also be a positive measure if it is utilized correctly and properly managed. To use debt positively and turn it into a profitable investment, it is important to understand the use of leverage. This is an essential thing to understand, as it exponentially multiplies your returns. Well, what does leverage mean? It is an investment method to use borrowed money to increase the overall potential and return on investment. With leverage, you can achieve your desired returns that you even think are impossible. However, it also has a high risk of losing capital. We'll talk about more leverage later in the video. Now, let's talk about how you can use debt strategically to make money and achieve your goals according to your requirements. Low interest rates and inflation are also important to consider because they define everything from economic uncertainty to stabilization. First of all, you must understand whether it is a good debt or a bad debt. It depends on many factors to know whether a debt is good or bad. The amount of time and interest rate that you have to pay back is the primary factor. Then comes the matter of why you are taking a loan. With all these things, it is important to consider your risk tolerance for debt, because your comfort level with a specified debt depends on it. Also, financial experts must guide everything, including the downside of taking on debt. Generally, debt is good that helps you to achieve long-term goals and make wealth. On the other hand, bad debt will not only affect your credit, but also depletes your finances. And these differences come down to two factors: cost and risk. Also, the expert defines bad debt as getting yourself at risk and not being able to repay your debt. Credit card debt is perhaps a common example of bad debt, as the average card balance in the US is more than $6,000 and it is considered bad due to its high interest rates. Moreover, car loans are also considered bad because you borrow money to buy a depreciating asset. Some experts say that if you take debt for your ongoing living expenses, it will not be an ideal use of debt. Good debt can help you achieve your goals. Well, you may have heard this from many people. Good debt can turn things in your favor. We can take the example of student loans as a good thing, but that depends on the correlation between your college degree and your earnings. However, a student loan is just a start, while a good debt may help you achieve your goals and also assist you to avoid a bad outcome. So, if we talk about achieving your objectives, you can also take the example of good debt by taking out a mortgage for a new house. Well, for many people, it is not possible to pay large payments as a whole. However, even if you are capable of paying one large amount, there are many advantages to taking debt for a house. That's how smart people use debt, because when you pay it back, it will result in equity in a house and also provide potential tax benefits. In addition, if you can make monthly payments, then you can also get an additional advantage of increasing your credit score with the help of consistent payments. As we have discussed, the power of leverage earlier in the video, leverage or leverage investing can also be a great debt strategy. However, it depends on things like time frame and your risk tolerance. To give you an idea, let's say you have an investment of $1,000 and the expected return is about 10%. So, if you invest your money, you can get up to 100% in return. But that's not the case if you invest half of your own money and borrow the other half. You could earn more if you borrowed the amount that contains interest of less than 10%. And this is how you leverage the returns on your investment. It will also be effective in case you borrow all the money. This is an example of margin investing that we will talk about later. A quick reminder, if you've enjoyed the video so far, consider subscribing, as we frequently upload such informative and educational videos. Let's continue. Now, let's have a look at the 5 best ways to make money by investing with debt with the help of using leverage. Number 1. Leveraged ETFs or exchange-traded funds. This is an interesting way because it allows traders and investors to increase returns by going short and long on a specific index. Even some companies like ProShares provide leveraged ETFs that allow investors to double their returns, typically ranging from 200% to 300%. And the funds enable you to invest in certain bonds, sectors, commodities, or indexes. Furthermore, the leveraged ETFs are attractive due to their exceptional profit potential. Well, you can also get the amazing returns that other investors look for with leveraged ETFs during the boom in the markets. But the main issues are they can work against you the same way they work in your favor. However, if you are good at trading and understand the complexity of trading in and out, you can avoid leveraged ETFs to magnify losses and wipe out all your investments in a matter of days. Number 2. Forex trading. This is also an amazing way for investors, because it helps investors to manage a large block of currencies with a small amount of money. And with Forex trading, investing in currencies allows investors to leverage up their accounts 100 to 1. If we talk about the benefits of currency trading with Forex, it can help you to make a significant amount in a short period, that too with a small amount of money. George Soros, the man who is popular as the man who broke the Bank of England, has made $1 billion by betting against the pound. On the other hand, currency trading also possesses the ability to clean out the account of the trader in no time. But in short, Forex trading lets people control big blocks of currencies with a small amount of capital. Number 3. Margin investing. Well, margin investing enables you to purchase a stock that has a higher amount of stock than your actual amount. For instance, you can leverage your investment if you have $50,000 in your brokerage account and can also open a margin account. This account will allow you to put a maximum of 50% of the buying price of a stock. So, if you put $50,000 in your account, you can have an additional $50,000 with your half amount and it will be loaned to you. Eventually, your $50,000 investment provides you with a buying power worth $100,000. And you can use this amount and purchase a stock that is worth $100,000. If the price of the stock increases, you can easily pay back your debt and can take the profit. However, there is a con in case the equity in your account falls below some specific value. A margin call can be issued by your brokerage firm. And if you're not able to meet that margin call due to fewer funds, they can liquidate your position in a stock, which will result in losses. Number 4. Short selling. Well, you might have heard about short selling on television in a finance-related program that it is time to short the market. This is also an amazing way to turn debt into profitable investing. It is a famous way of betting against specific security by borrowing shares from investors, and then selling those shares with the hope that they will decline in the future. The short sellers have made a fortune for themselves, and it works by correctly timing the declines in market and stock prices. The disadvantage of short selling is that the losses are unlimited. This implies that short sellers are likely to lose much more than their initial investment. Number 5. Hedge funds. These funds are considered the biggest users of leverage. Hedge funds are known for making incredible returns with the use of leverage. Most hedge funds lever up 10 times their total assets, and they are also used by billionaires. The famous American billionaire hedge fund manager John Paulson has also used the power of leverage and turned his accredited investors into multi-millionaires. But hedge funds can also be bad and contain disadvantages if the investment thesis is not correctly done by the fund manager. It can lead a hedge fund to lose the capital of every investor and can drive it out of business. Also, hedge funds are mostly available for individuals who have a high net worth. However, the hedge funds, like the long-term capital management LTCM that requires a bailout, were levered up to 30 times their assets. So, these are the ways that can help you make money. This can go against the traditional thinking that debt is a negative term and can go against people's finances. However, if the debt is managed correctly and appropriately, it can help people to grow their wealth by enhancing their returns substantially. As always, thank you so much for watching the video until the end. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya, till the next time.